Unmute yourself.
Good afternoon. This is Alexandria Ferguson. I am the Assistant Creative Director at O&M Partners, and I would like to welcome everybody to our town hall call this afternoon for Grid Metals. A little bit of background for those new to our broadcast. O&M Partners is in the business of bringing public companies and investors together in real time. The information presented is already publicly available. We're hoping that this broadcast will bring this information to your awareness, clarify the context, and help you to make a better informed and wiser investment decision. We hope this call answers all of your questions. If you have any questions arise during the webinar, there is a chat function in the GoToWebinar platform. You can send in our questions, or you can email them to someone at the O&M Partners team. Grid Metals Corp trades under the ticker GRDM on the TSX Venture and MSMGF on the OTC. To open up our presentation today, we have Mark Fronmeyer. Mark attended UC Berkeley as a General Motors scholar and graduated in 1996 with a degree in electrical engineering and computer science. After 11 years leading the development of advanced technology game development projects and the sale of his first startup, Garage Games, Mark turned his entrepreneurial energy towards sustainable business development in Oregon. Mark founded Arcimoto in 2007 to bring an affordable, ultra-efficient new vehicle with everyday utility into the marketplace. Mark also served on the Oregon Transportation Commission from 2011 to 2014. His hobbies include democracy reform. He founded the Equal Vote Coalition and is co-petitioner of the Star Voting for Lane County initiative, independent video game development, and hiking with his dog Kiera. He's here to set the stage for us on battery metals. So, Mark.
We built it for ordinary trips, to lighten the footprint of going to work and getting groceries. What we discovered along the way, the pure delight it is to drive. The fun utility vehicle from Arcimoto. Joy, meet ride.
All right. Good afternoon, everybody. I'm Mark Fronmeyer. I'm the founder and CEO of Arcimoto. So you can sort of think of Arcimoto. We're building pure battery electric vehicles, which is the consumer of the product that Grid Metals is on the production side of. And we're one of what has been described as the Cambrian explosion of new electric mobility devices. And what you can sort of, and this is everything from when we look over the course of the next decade, this is going to be the decade of the electrification of everything, not just in the mobility world, but you can think of everything from, that is a gas-powered tool today is going to be an electric tool tomorrow. And where electric bicycles, electric scooters are focused on changing behavior patterns, what Arcimoto is really focused on is the disconnect, the giant disconnect between cars and how people actually use cars. So at the outset, Arcimoto is really not about changing the behavior patterns of drivers so much as creating the right tool for the job. And this picture, this combination of pictures on the screen to me is really instructive. We cover our cities in asphalt to move and warehouse cars. About half of our urban landscape by geographical area is covered in land that's more dead than the deadest desert in order to get around. And yet, despite that fact, almost every major metropolitan area in the world suffers from massive traffic congestion. And to us, it is that disconnect between the capability of the car, which is an amazing invention designed to carry 5 to 7 people hundreds of miles at a time, but the way that we use cars across the wide swath of vehicle trips is alone or with just one other person traveling a short distance with a small amount of stuff. And so when you think of the Arcimoto vision versus, say, the electric car vision, the electric car idea is we're going to take our existing idea of the car and add a bunch of batteries and get rid of the gas drivetrain and go pure electric, but it doesn't change the fundamental disconnect between the capabilities of the car and how cars are used on a regular basis. So the Arcimoto vision is all about really right-sizing the footprint of mobility, and in so doing, building a product that is affordable, not just in the sense of it matches the cost of a brand new gas-powered car, but ultimately that it comes in at a much lower price point, something that's in the range of the price of a used car or a toy product like a motorcycle or an ATV, but with the daily utility that you need to go get groceries, go to work, go out with a friend, do an urban delivery, and so on. And so what we have built over the course really of the first 7 years of the venture is a brand new three-wheeled electric motorcycle platform. And what we're doing is we're applying that new platform to slices of the overall vehicle market. And we're starting with consumer driving, last mile delivery, and emergency response, really as our first entries into the market space. So this platform is it's awesome. It's awesome to drive. The ride experience, and we name our flagship product the Fun Utility Vehicle. The reason why we did that is that we put driver after driver after driver after driver in our early vehicles, and they said, you know, this is the most fun I've ever had driving a vehicle. One guy recently said, this is the most fun you can have with your pants on. And it's the ride experience. We look at the fun factor as really sort of like the spoonful of sugar that helps the clean tech medicine go down. But the real core of the platform is that it is just massively more efficient with space and with energy than a regular car. It's about, you know, we were aiming for 10x the efficiency of today's average car. Product number one is about 8 times the efficiency of the average car on the road today, between a quarter and a third of the weight of a typical car. You can park 3 to a space, so it makes parking and maneuverability in urban cores just a much better experience. You realize when you're driving down the avenues of Manhattan that you're pretty much the only person on the road actually having a good time. You can beat the times that Google Maps shows. The last time we were there, we beat Google Maps time by about 20% on a regular basis, getting from Midtown to downtown, for example. So product number one, which we launched production of in September, is the Fun Utility Vehicle. We are a consumer-first brand. The company began out of a personal quest for a reasonable way of getting around, and we, at a root level, believe that consumers need to have the ability to choose products that let them lighten their own footprints and right-size their own footprints on the road. So we started with a consumer-focused product launch, but then right after that, and we announced 2 new products on the Arcimoto platform last year that we are just about to launch pilots of here this quarter. The first is the Deliverator, and that is our product focused on last mile delivery, and the Rapid Responder, which is for emergency response. So I'm actually incredibly excited about both of those new products for different reasons. One is that the Deliverator is really the answer, we believe, to the shifting landscape of last mile delivery. Just as an example, food delivery is expected to grow from about a $30 billion market today to a $350 billion market within the next 10 years, driven both by apps like Uber Eats, Grubhub, to the fact that basically every major grocery chain is now moving to a delivery model. And so where same, you know, the next day or 2-day delivery model where you pack up the big truck at the beginning of the day and send it out for a day's worth of deliveries. That model is being supplanted even by companies like Amazon with just-in-time delivery, 2-hour delivery of product orders in certain cities now. And that necessitates, we believe, a new platform for delivery. So the benefits of the Arcimoto platform in terms of parkability and maneuverability, lower cost to operate, lower cost to insure, lower sticker price, all of those add up to an awesome last mile delivery solution. And then another product that I'm incredibly excited about is the Rapid Responder, which takes those very same platform benefits and applies them to emergency response, law enforcement, campus security. If you have ever been in Manhattan and seen an ambulance stuck behind a wall of traffic, you just think to yourself, gosh, I really am glad I'm not on the other end of that call. And so the ability to really easily maneuver through traffic where cars don't actually need to get out of their lanes, they just need to move to the sides of their lanes in order for the Rapid Responder to get through. We see the potential for government fleets to not only save on emissions, save on cost of vehicle purchase, but ultimately save lives. And so the Fun Utility Vehicle now in production, delivering to customers, Deliverator and Rapid Responder, those pilots are just about to begin. Really the big news for Arcimoto in 2019 was the initiation of production. We started in 2007, spent 7 years iterating the basic product concept, then built looks like, works like prototypes to prove the market, went public in order to build out the factory and move through compliance. We went public in 2017. And then 2 years to the day from when we went public, we actually launched production and delivered products to our very first customers. So that has meant growing from what was essentially a boutique vehicle R&D prototyping company into a full-fledged manufacturing venture, quality management materials, all the way through to sales, product delivery, recall, and warranty and maintenance management. So it has been a massive growth process over the course of the last year, both to prepare for production, and then now that we are in production, we delivered 45 vehicles, built 57 vehicles by the end of last year. We started production at a rate of 4 vehicles a week, and we expect that by the end of this quarter, we'll have more than tripled that production rate as we're on a steady, methodical growth path to scale production to truly meaningful numbers. So another bit of good news is that the early reviews have been very, very positive. And this is key to our approach, is making sure that our early customers are very happy, that our early media is very positive around the product, and that the vehicle lives up to its name. And so far, that has certainly borne out. We have more than 4,000 pre-orders for the vehicle. I think the recent total is right around 4,300. A pre-order is somebody who's actually cracked open the wallet, put down a deposit for a vehicle. We see this as certainly not a closed sale, but indicative of market traction. And these are by and large consumer orders. As we initiate the pilots of both the Rapid Responder and the Deliverator, our sales focus will shift a little bit towards larger fleet orders, just simply because it is easier to sell 5,000 vehicles to a single customer than to sell one vehicle to 5,000 customers. And that combination between the consumer product and the fleet products is what builds the case for and the foundation for a much higher scale production venture in the next several years. And I should mention as well that all, they are, as we present these to the market as 3 separate products, but in reality, they are a single chassis, a single frame, all between the Rapid Responder, Deliverator, and Fun Utility Vehicle. They share about 90 to 95% the same parts. So from a production side point of view, we gain the benefit of the economy of scale across all 3 products. It's sort of like having 3 fishing poles in the water instead of just one. but all coming off of a single production line, a single manufacturing model, and a single supply chain for scale.
Hey, Mark, sorry to interrupt. This is Scott here. I was wondering, just for time, could you talk a little bit about the battery production side of what you're doing?
For sure, yeah, and Scott, I'll button up the company piece of it. This is, in terms of the battery production side. So we basically build our own, and I think this speaks really to the opportunity in the battery space generally, is that we are now at a point in the battery production world where within a couple of years, electric vehicles are going to be at cost parity with gas-powered vehicles. And that is going to be a major inflection point in the demand globally for batteries. So we're not a battery manufacturer. We don't make our own cells. We build battery modules. We put those modules in the vehicle, and we source from basically the global supply chain for batteries. But what we have seen year over year over year is just, when we got started, I think the cost per kilowatt hour of batteries was in the $700 to $1,000 range. And what you're seeing now from Tesla, from General Motors, LG, is a sub $100 per kilowatt hour of battery. And that just fundamentally enables a massive electrification of basically everything. So it's going to be, at Arcimoto, we see this as the shift to electrification as a time that is ideal for the introduction of new vehicle platforms. That is, that we're going to be able to deliver not just a cost parity electric vehicle, but something that is ultimately radically lower cost than cars on the road today. But that the battery market as a whole is just going to, in the next several years, absolutely blow up. So, I'm happy certainly to take any questions. Scott, if you have anything more particularly you'd like me to dive into on the battery side, I think that the point of this is just to say that, we believe Arcimoto has a unique approach to the market for electric vehicles, but we are certainly not alone in terms of just the mass profusion of new electric mobility options, let alone the marketplace for energy storage for the home, and then the electrification of really anything that is currently powered by internal combustion.
That's great. So you definitely see an increase in the demand for these metals and the batteries that drive your product.
Oh, I think, and I'm sure that in the grid metals conversation, we'll get to the look at the future projections in terms of battery demand. But it is it's an exponential growth curve in terms of demand. And I think that one of the challenges is going to be for the supply chain to keep pace. That is, that once that cost parity point is hit, the demand for the resources that go into the battery is going to outstrip the supply that the marketplace currently has, and the rate of production that the marketplace currently has. And so that is going to provide, we see that as an opportunity on the vehicle side to have a vehicle with less battery than a full-size car, and that is a competitive advantage for Arcimoto. But on the supply side, it is going to be just simply capacity demand pegged out for I would say likely for the next couple of decades at the very least.
Exciting. Thank you so much.
Yeah,
Appreciate it. And I will
much.
be, if anyone has any questions particular to Arcimoto, I'm going to stick around for the Q&A.
Great. Thanks, Mark. Thanks for giving us some context for that. Next, we're going to have Robin Dunbar, the President and Director of Grid Metals, present. Robin has been involved in the mining industry since 1996, following 14 years in commercial and corporate banking in Canada. He's also director of the McEwen Mining and is a former director of Australian nickel producer Western Areas. He served as CFO and director of Aquila Resources as well. He received a BA from Western University and an MBA from Dalhousie University. His commercial banking and finance background, together with his experience in the mining industry, makes him ideally suited to bring grid to fruition. So with that, we'll turn it over to Robin.
Thanks very much. It's a pleasure to be here today and talk about grid metals to those people watching the presentation. I'm here in sunny Toronto today, and I'm happy to run through a presentation. We just finished PDAC here in Toronto, and despite the coronavirus, it was a very good turnout and a lot of excitement in the battery metal space and other commodities at PDAC this year. I will be making some forward-looking statements in my presentation today. That kind of goes with the territory, so this is a disclaimer. I'd just like to give a little overview of the company first. Not only is Grid involved in exploration and development for the battery metals, particularly nickel, copper, and cobalt, but we also are on the other side of the car industry with exposure to palladium. And today I'm going to talk a little bit more than I normally would about palladium, just because it's one of the few metals that has seen a real price explosion. And we're seeing a period now, it looks like we're entering several years of very strong demand for the metal. The mining industry in Canada was really, the palladium story became front and center when in December, North American Palladium, which was one of the two North American producers of palladium, was acquired by Impala Platinum of South Africa for $1 billion. And there were all kinds of strategic reasons behind that, which I can touch on a little bit later. We are working on our Palladium project. We have a very rare and large land package with very good scientific and encouraging exploration information to date. And we have a more advanced copper, nickel, cobalt, PGM property in Manitoba, which we continue to work on as well, which also has a resource of platinum and palladium as well. And we are, still a very small market cap, now a little bit more than $7 million. And we think relative to the prize we're chasing and the market trends that are going to occur over the next few years, that we offer really good value to shareholders. This chart just gives a little bit of a corporate snapshot with our share price on the bottom over the last 12 months. In terms of our shareholders, Western Areas Limited, which is a ASX listed nickel producer, is one of our largest shareholders at 8.6%. My shareholding is about 5% of the company. We have 67 million shares outstanding in the company right now, and a little over $2 million in cash. We recently just did a raise, and for the first time in a number of years, had some Toronto-based institutions come into the stock. So, we're in much better financial shape right now. We're really trying to keep the share dilution of our company to a minimum as we advance our projects. I'll just give you a sense of the team. Myself, I've been in the business now for over 20 years. I'm pretty varied experience, and mostly financial. As I said, I had 10 years as the director of Western Areas, which is a nickel company in Australia, which went from exploration into production. So I really saw all sides of the development phase of a company that makes a very difficult leap from just having a new discovery into putting mines into production. The other key member of our senior management team is Dr. Dave Peck, who just joined us recently. And Dave, who I've known for a long time, was just recently the VP Exploration for North American Palladium prior to its acquisition by Impala Platinum. And so Dave is a leading geoscientist for the Platinum Group metals, but he also, prior to joining North American Palladium, he was the global nickel commodity leader for Anglo American, one of the large multinational mining companies. And Dave really literally traveled all over the world looking at nickel deposits and geological formations, and also worked for Anglo Platinum. So Dave really has incredible wealth of practical knowledge, large budgets. And what this truly translates for Grid Metals is Dave has a very discerning eye as to what type of projects are our company should be pursuing, because ultimately, in most instances, the mining industry itself is going to be the acquirer of our project if we can prove up an attractive resource. And Dave also has a strong academic background with a PhD in geology from Melbourne University in Australia. We have two geologists working as required on our properties: Kerry Galischuk in Manitoba, Paul Davis in Ontario, and a very experienced board and investor relations team as well. And David Black is not listed on here, but Dave's been with us for a while. And if any of you have any questions, please reach out to Dave or myself about the company. So I just want to give a little bit of explanation about the palladium market. What you see in the palladium market is right now is the world's biggest palladium producing countries are based in South Africa and Russia, and these are perceived as fairly high risk jurisdictions. The North American production, there's one mine in Canada and one mine in the US. Those mines have recently been purchased by the South African producers, and this means that right now there's no kind of domestically owned production for palladium. And this is important because it shows that there's strong interest in palladium mines, new discoveries of palladium globally. And right now the price of palladium, even though it's fallen several $100s in the last 3 or 4 days, with the market jitters, I think largely due to the coronavirus, the price closed at $2,400 an ounce, and so this makes it the best performing metal of any in the last 12 months. This slide gives us an idea of who uses palladium and also a price chart. Palladium is primarily used, about 80% of it is used in the automotive business for palladium-based auto catalysts. And an auto catalyst is that piece of equipment in your car that takes the emissions, the harmful emissions, out of your exhaust. So recently, there's been higher exhaust emission standards that have been enacted in China. And for those of you who've been to China, you'll know why. The air quality is terrible. And also Europe has enacted higher emission standards, and primarily after the Dieselgate fiasco, where the Volkswagen was found to be cheating on their emissions testing. So palladium is really the key metal that's used, and when you have lower or higher emission standards, you need to use more palladium. And so that has led to a situation where we see in the automotive business the trend towards electric vehicles, which have no emissions in the vehicles themselves, and for internal combustion engine powered vehicles, we see higher loadings of palladium. This slide just kind of outlines the two South African-based companies that have acquired production in North America, Sibanye-Stillwater and Impala Platinum. Both these companies produce platinum and palladium in South Africa. One of the key distinctions is in South Africa, the ore they mine has both platinum and palladium, but the majority of the value is in the platinum, and palladium is a lesser amount of the ore. In North America, it generally tends to be that platinum occurs with palladium, but it's palladium dominant. So that is why the South African companies are looking to the mines in North America, because they're really palladium mines versus the mines in South Africa, which are platinum mines. They also like Canada's jurisdictional risk, and the cost of mining here is very good as well. What are some of the risks to palladium? Well, of course, the switch to EVs is definitely happening, and that is going to occur over the next few years. I don't think the internal combustion engine is going to disappear anytime soon. And one aspect that people often don't realize is that the full and mid hybrids and use an excess amount of palladium because the emission standards have to kick in when the engine is cold, and palladium is good as that as well. There could be some risk to palladium from substitution by platinum, but that takes time, and the market really hasn't seen that yet. Fuel cells are also an option as part of the electrification push, and but they also use quite a bit of the platinum group metals in their fuel cell technology as well. So getting to the geology behind the platinum palladium markets here, you can see this is a list of the global distribution of the major platinum group metal and copper nickel projects. You can see there it's heavily weighted to Russia, South Africa, some in Australia, and some in North America. One point I would make is that these type of geological formations that have palladium and nickel are very rare compared to gold deposits or silver deposits or copper deposits. So for a company like ours, we in the market when we're trying to develop our projects, we face fewer competitors in the space. So really the challenge for us is finding what is perceived to be economic deposits, and that's really our focus. We have two key projects. One is the Palladium project, the East Bow Lake in Ontario, and our nickel copper platinum group metal project in Manitoba, which we call the Makwa Mayville. Just to give a bit of overview about the East Bow Lake project, this has gotten quite a bit of interest for our company. The map on the bottom shows our location. We're about an hour west of Sudbury. Sudbury is the mining capital of Canada, really. There's two smelters there now owned by Vale and Glencore, and they treat nickel and copper PGMs there. And so we are very close to that. We're just down the Trans-Canada Highway. It's a really good location. The East Bow Lake project is a large layered intrusion that has the right rocks. Basically, the main mineral of value found in those rocks is palladium. And if we looked in the geological textbook of how this type of deposit, it's similar to other very large geological formations. One is the Coldwell complex, where Generation Mining is working on a project in up by Thunder Bay. The Platte Reef in South Africa, there's multiple deposits there, and there is also these similar types of deposits in Finland, one of which is being developed by Palladium One. So our plan is with the high palladium prices to aggressively explore this project, and we have drilling planned for later this year, and we are utilizing a very large project database that we've generated. We've had this project for over 20 years, since the last palladium boom, and the one thing that's really changed is we're utilizing a new geological target model that Dave Peck is bringing his experience from Lac des Îles. And what Dave will tell you, if he was on the call, he'd say that of all the geological formations he's seen around the world, East Bow Lake is the most like a Lac des Îles. So that's important because Lac des Îles is a 10 million ounce deposit. It will generate approximately $500 million of cash flow this year. And so it's a very significant deposit. One of the, we've honed in on a couple areas. When you've got a 20-kilometer area you're exploring, you have to hone in on a couple areas to start. And we have two areas that we identified. One's the Central Zone, and one's the south zone. And together, these two areas that have surface palladium mineralization, and we drilled a few holes about 20 years ago, they had very good palladium values. So we figure this is a really good place to start. This is going to be one of the prime areas that we use our new technique of geophysics. Now, what I'm showing you here, it's a little bit difficult to understand, but what we're looking at here is the same areas on the previous slide. These are the palladium values in the colors. The reds are over 3 grams. These go all the way along for about 3 kilometers. But and these are some of our drill holes that we drilled in this area. But we were always looking on kind of, as you know, along the margins of the intrusions near surface for palladium. But the lactazil model, think of a giant cone that has a footprint of about 800 meters, so about the size of one of these circles, but that goes down to 1 kilometer or 2 kilometers below depth. So the lactazil model would be looking for structure. So you can see this big magnetic line here. That's some kind of geological feature, a diabase dike that goes through the project, and then a cross-cutting structure. And right at those cross-cutting structures is where we get a lot of surface mineralization. These are geophysical pics from a VTEM airborne survey. So this is an area that we're going to do our new type of survey that worked extremely well for lactazil, which is a Spartan MT survey. And this survey, you set it up and it will see areas that pick up the structure, an alteration around the structure, and low resistivity, which often is associated at lactazil anyway with palladium mineralization. So this is a target area which is, you know, in by any standard quite large, but it's a very small area of the property, and this is one of 2 areas that we're going to start our geophysics. Now this work is going to start next month, and then that's going to take about a month, and then after that we're going to be out and drilling these targets. This is a second area that we're going to do. This is called the Parisian Lake Deformation Zone, and there's a big structure in yellow running through. These drill holes are 200 meters apart. Some of them have values up to 5 grams in the drill core. There's really no systematic exploration. Again, shallow holes, lots of surface mineralization. Same type of setting as you see at lactazil on surface, but the most likely is that a deposit will be at depth, so starting from surface down. So right here as it stands, we have a zone of about 1.3 kilometers. We went in and did some recent sampling, and we got about 3.39 grams of palladium. You can see the platinum is a lot lower, a little bit of gold, and the copper nickel is very small compared to a lot of deposits. One of the things that means is that the concentrate, so really the product of mine that like this would produce would be crush the rock, float it, and you're producing a concentrate that contains platinum, palladium, copper, maybe a little bit of nickel. This type of deposit with a very small amount of sulfide that would be floated will produce a very high value concentrate, with the primary mineral of value being palladium. So that we think that's something that the major producers are looking for, because they run smelters that look to primarily smelt palladium. This is a slide. It's just things are changing fast in the market, as you might imagine, but it lists some of our competitors in the junior space, and you can see that from the market cap, they're generally fairly small. Generation Mining is a bit of an exception. They have a PEA stage project that's quite large, and they're moving on past the PEA. The juniors all have, on this chart, certainly all have a very, very prospective Geology, and they're all out starting exploration on their projects now. Most of them have recently been funded. And we're still at the lower end of the value chain, but we think that our project is certainly one of the most prospective. And in terms of the potential upside of a new discovery, we think the target that we're chasing here is very, very lucrative because there's just very few actual of these types of deposit, and I think the demand is very high. We saw some interest at the PDAC from offtake companies that buy metals concentrates, because these types of metals concentrates, when produced, are very high value, can be shipped all over the world. So we think this space is really going to be one that's going to be closely watched by the mining sector, and that any new discovery here is going to have a tremendous increase in value. So this is really at the cutting edge of the exploration cycle, where you look to make a new discovery, raise more money, drill, see the stock price go up, and that's an exciting event for junior share participants in the market. And that's why we're saying to people now, we have a fantastic property. We clearly have one of the top geoscientists in the field. We're ready. Our program will be about $1 million, and it's starting. So we think it's a great time for people to dip their toe in the market and look at picking up some good shares. The other property that we've worked on and have done a ton of work is our Makwa Project. We're about 140 kilometers outside of Manitoba. Here we control a really large land position in the Bird River Sill, which is a highly prospective belt of rocks. Here we actually have a significant resource that's been drilled off in 2 open pits. The Makwa has a smaller but higher grade deposit of nickel with byproducts of copper and cobalt and PGEs, and the Mayville, which is over 30 million tons, is copper dominant and with byproducts of nickel and platinum and palladium as well, and cobalt. All in all, the metal value is roughly 40% nickel, 40% copper, and 10% PGEs. The plan with this project is to move it towards an updated PEA. But first, having brought Dave Peck on, we're going to look at our exploration potential, because the one thing that would really tip this project over and make it much improved is some more tons, particularly at Makwa, where we have pretty high grade ore in that pit. And so that's a key factor for us. And what this gives shareholders is a store of value. And I think that where you see and what's happened in the palladium space, where there's been a tremendous surge in interest, a very small group of companies that have been benefit from the investor interest, and it's all based on the metal price. When the nickel cycle comes back, I think we're going to see the same type of interest. Back in 2007, when the nickel price was over $10, our company had a market cap of over $100 million, and that was based on the Makwa deposit at the time. So there's a very limited universe of junior companies in the nickel space. So having this project with a resource and a highly prospective palladium project on the other side puts really Grid Metals on both sides of the auto industry. So as long as they're making cars, their Grid will be looking to develop metals that will suit either the EVs or the internal combustion engines. And that is a bit of a unique profile for Grid Metals compared to many of our competitor junior mining companies. This slide gives a little bit of a snapshot of the project from we did a preliminary economic assessment back in 2014. What's important to note here is that the capex for the project is relatively low compared to many nickel projects. This project is smaller but compared to the bigger nickel projects, which often have a market cap, a capitalization requirement of in the billions, this is quite modest. So, it's still a pretty good size project with good value rock, and as the price of nickel increases, this project will be more and more attractive to the market. This slide gives a illustration of some of the drill holes from the Makwa deposit. On the right, you can see that we have some pretty good widths of good nickel and copper, and same for the Mayville. So these open pit deposits are quite robust when we get the metal prices in the right range. Recently, we've had good success in terms of work on the metals concentrates, and that's something that we really focus on. Our product, again, here we're going to sell as a nickel concentrate and a copper concentrate. So those need to meet the requirements of the smelters. And recently, test work at our Mayville project has shown that a certain amount of the cobalt there will be recoverable and payable. And as the guy at Glencore said to me, it's just in the form we like it. It's with pentlandite, which occurs with the nickel. And so we haven't engineered that into our study yet, but that will give us an increase in the amount of metal that we can recover. Other factors that have changed since 2014, the Canadian dollar has fallen. Our costs are going to be in Canadian. Our sales are going to be mark to market in US. So those will have positive effects on the project. To the downside, costs and for operating and capital costs has certainly gone up, and those are the factors that will all be updated when we do the new updated PE. The other project we want to just show people that we have in the portfolio is up the Mayville project. We have this little purple slice, which is the Mayville PGE zone, this zone is similar again to the Lactazil type deposit. We had some really good drill intercepts early on. This is a tough target, it's hard to follow, but this is another area that we've got the right rocks, some very good drill results, and it's something that Dave Peck is going to be turning his head to sooner than later as another project in our portfolio. This is a slide that compares our company on the right to some of the other junior nickel companies in the space. And again, grid is attractive value compared to some of these companies. The black dots are the internal rate of return after tax. The green bars are the amount of capital that it will initially cost to get the project in production. Talon is a project in Minnesota that has quite a high grade deposit that has the lowest capital cost. Noront is higher, that's up in the Ring of Fire. It's quite a nice project. They don't have a road up there yet. And then you see these three other projects, which are commonly noted by analysts in the junior space in nickel. But all these are much lower grade projects, and they have quite high capital costs of well over $1 billion. So we think the nickel market is going to, a project like ours, if we can, add some more ore and improve the economics, is going to view our project very favorably, given the low capital cost of trying to put a project like this into production. And then just to give a summary of grid at the current time, and I'll start on the right. Our share float is quite small. We have significant working capital. We have a drill project in a very attractive commodity that's starting right away the next few months. We have a PEA that we're updating and working on currently. In terms of our management team, we've got a person leading our technical side, which is, I think second to none in the industry. We're in Canada. We're in 2 good jurisdictions in Canada with pretty low political risk, and our projects are close to infrastructure, and meaning they're relatively lower cost to explore. And I think that gives a good overview of Grid Metals. I think we have a unique profile, and certainly it's an exciting time for Grid, and we're really looking forward to what happens in the next few months in the palladium space, and in the slightly longer term, being well positioned in the battery metal space as well.
Great, thank you so much, Robin. I'd like to move to Q&A now. So I'll start with Chesley Morton. Chesley, do you have a question?
Yes. First of all, that was a great presentation. I think you've got a wealth of opportunities there. About platinum, to what extent is platinum sensitive to additional supply? I know Friedland's been trying to do that. I guess it's Platreef in South Africa.
Yeah.
To what extent could that depress prices?
Well, the current deficit in the palladium market is about 1 million ounces. Yeah, platinum is sitting around $950 an ounce, whereas palladium's $2,400 an ounce.
Right.
The big thing people are potentially worried is substitution, but palladium has better qualities. It works at higher temperatures, which is important. And the risk of substitution is, I think, fairly low. There are a few mines that are on coming online. Waterberg is one, which is a joint venture between Platinum Group Metals, Impala, and a Korean company. And then Friedland's project in Africa is another one. And then most other palladium will come as a byproduct of nickel mines. But with with the price of nickel low, there isn't very much activity happening in expanding nickel production currently, and the 2 palladium mines have production will be in the range of 200 to 250,000 ounces, and they're still several years out. So I always quote people on Macquarie Research, who I think does a very good job. Recently came out, and 4 months ago they said, well, we think there's going to be a lot of substitution from palladium into platinum. And their recent report that came out a couple of weeks ago, they totally reversed field. They said, we don't see the substitution happening. We don't see where the new mines are coming. It's going to be hard to fill this gap. So for a junior company like ours, I think we've got some good runway ahead of us in terms of time to explore for palladium without the rug falling out from under us, like it did for cobalt, like it did for vanadium. But I think those are completely different stories. Vanadium is not an LME metal, much smaller market. Other products can be substituted. Cobalt, if you look at the market for supply demand, all you had to do was see that Glencore had excess capacity in Africa. And again, a much smaller market. All they had to do was call the foreman, tell them to put another shift, and the palladium deficit was gone effectively. Here you have your key customers or auto companies who value long-term security of supply, and they don't want to have run out of palladium. So they're scrambling around to get all the palladium they can, which is really putting the squeeze on. So we think we're in a really good spot, and yeah, they always say the cure for high prices is high prices, but I think in this instance, we think the high prices is going to be here for a period of time. Any kind of economic forecast we do for, palladium project, we're going to use $1,500 an ounce, not 2,000 or 2,400. So that's really our target, and we just think that a real discovery, a quality discovery of palladium is just going to be a strategic asset that, it's going to weather the short-term ups and downs of the market price, and it'll just be a very kind of strategic asset, particularly something like our project here, an hour away from Sudbury. So pretty bullish on the space right now. And you know, we've had this property for 20 years. You know, we want to take advantage of these markets right now in terms of financing and interest in the company, but you know, we do have a longer term view on the development of this project.
Do you think a project like yours, the lenders would require some sort of hedge?
You know, a lot of times they do. You know, there's different ways to finance mines, but you know, you know, a project like this would be, you know, I think in the range of, you know, $500 million capex, something like that. I mean, you're going to have to give something up to, you know, to get that type of money. I honestly think though, the type of deposit that we're targeting, we're not going to be the ones putting into production. I think the South Africans are very, very keen to scoop up any new discoveries, and there's other players as well. So I think it's the opportunity here for investors, in my view. You know, it's particularly the palladium side right now is quite risky. I mean, the key risks are, you know, we don't have a resource at East Bull Lake. No matter how good the science is there, it's still exploration. And on our other project, the nickel price is low, and you know, it's been quite sticky. You know, the EVs, you know, it's happening, but it's still a fairly small amount of the nickel market. But the real, I think, opportunity for shareholders for a company like ours and the type of people who invest in juniors is to, you know, be positioned as we go out and drill and look to make a new discovery, and that'll be reflected in drill holes and in the stock if we're successful.
That's great. Well, thank you.
Thank you.
Thank you, Chesley. We're going to move to Doug Loud. Doug, can you unmute yourself?
Apparently I can't. Can you hear
there
me?
We go.
We can hear you there, Doug.
That's okay. This is all very interesting, but as you're wandering along, what is the status of permitting where you are? What is it going to take to get to production if you don't get eaten early on?
Yeah, Ontario, you know, in both Ontario and Manitoba have predictable permitting regimes. It does take time, obviously. In Ontario, we have our permits for drilling, so you know those we got pretty quickly. The Sudbury area is a pro-mining area. We have an MOU with the First Nation there. I think the area that we're in is close to Sudbury, but there's no cottagers. It's being logged. So I say, you know, if you go down the list and tick off Ontario and where we are for a potential open pit or underground mine, it rates pretty highly. Manitoba, you know, it depends on where you are in terms of the First Nation relations. Like all across Canada, there's more and more awareness of the First Nations that they want to be partners. But we try to be very proactive and you know, and have active discussions with the First Nations. There's never been a mine in Manitoba that has applied for a permit that hasn't been permitted. So they're still batting 100%. So it's doable, but it takes time, right? So yeah, again, sorry.
What is the status of your studies? Feasibilities, PEAs?
Yeah, we're PEA in Manitoba. We're in the process of still working on to update that. We had planned on updating that, you know, by mid-year this year. I think because of the nickel price is lower and having Dave Peck come on, we might look at doing some more exploration and try to add some more ore before we go back and update the PEA. But we do have a PEA, and you know, like a lot of nickel projects, we need around $8 or $8.50 a pound nickel. And I think if you look at around the globe, the most nickel companies will use that type of price per pound in their economic models. It's great if you can do it cheaper, but there just isn't very much around for in the space that can be developed for less than that. So yeah, we have one project more advanced and one project more exploration. It's interesting that because of the commodity, the exploration project and the rare nature of palladium deposits is getting more attention right now. So we try to be responsive to where the interest in the market is. And I think that the people who are, buying the Grid Metals shares these days, I think safe to say it's because of they think we have a good shot at our discovery on our palladium property.
So what's the one thing you want me to remember about Grid Metals?
I would say Grid Metals. If you look back on this webinar in 6 months, that I want you to remember that the risk reward of what we're doing here is in the exploration space is extremely high. If we have some good drill holes, our stock's going to be a lot higher than it is today. And when you think back, you can say, well, yeah, I went out and picked up a few shares, in which case you'll be a happy investor. Or you can say, hey, I listened to the webinar and it was really interesting, but I didn't do anything about it. So
Thank you very much. Very interesting.
Thanks, Doug. Michael Potter, are you still with us? Would you like to ask your questions? I know you had a few.
Yes. Yes, that was a very interesting talk, Rob. Thanks a lot. I've got a couple of questions. At East Ball Lake, what's the mineralogy of the palladium and the platinum? Is it sitting with the sulfides or is it in metallic minerals?
Generally the sulfide, generally with chalcopyrite.
Okay. Sorry, it's my dog. And is there any erodium associated with the PGMs at East Ball Lake?
There is, yes. It's lower, and to our the dog disagrees with me there. We think that if you have more than about 100 parts per billion, it could be payable, and because there's a very small amount of sulfide that gets concentrated, the upgrading is we should have a good chance at getting payable for rhodium if we have enough of it. Yeah.
Okay, and then how long do you think it would take if things all sort of lined up to actually get a mine into production at East Ball Lake, thinking that this current structural palladium deficit is probably going to start closing around about 2025?
Yeah, I think realistically we've got, I hope in a good case, a couple of years of drilling ahead of us here. That's going to be that's going to kind of be the time we need to drill off a resource, and that'll be if we're doing that, that'll be a happy time for shareholders. Then you get into your study phase. Now, having said that, there's elements of the study phase you start, pretty early, like metallurgy and your general, scoping. But it's going to take 5 years at the minimum. That's just the way it is. This is really more about getting what's perceived to be a mineable resource and capturing the value for the shareholders. Generally speaking, in the development curve, when you get into the mine actual development feasibility studies, the stock tends to taper off, right? People lose interest, and they say, call me when you got a mine, but it's the discovery phase that offers a lot of value for shareholders. But to your point, 5 years plus 7 years.
Okay, fine. Yeah. Thanks a lot.
Yeah.
Thank you for those, Michael. Next, we're going to move to Peter Pomolowski. Did you have a question today, Peter? Guess not. We will move to Steve Rentschler. Steve?
Yeah, hi, Robin. Those historical holes that were drilled back, I guess, in 2002, how deep did they go? And was the grade increasing at depth?
They were really shallow. I think the deepest was 100 meters. So, you know, they hit like a zone of mineralization. They weren't deep enough to say that it increases at depth. Really, what we're looking here is like a focal point for mineralization, which will be a faulted zone with that will concentrate mineralization. And at Lac des Îles, that type of mineralization basically goes from surface down to 2 kilometers. That's a similar type of thing we're looking here. So it's more, I think, a question of finding these kind of cones of mineralization. And literally that was a concept that we hadn't considered, you know, when we were last exploring. I'll tell you one interesting that we optioned this property in 2008 to 2012 to a company who did some work looking for nickel at the base of the intrusion. So they drilled a few deeper holes. In one of the holes, it was kind of one hole way out in the middle of nowhere, and they hit 6 meters of 2 grams and about a meter. It was about half a meter of about 15 grams, just kind of right out in nowhere. And you know, it just shows you what it does show you is that there's a lot of palladium in this intrusion. And so, as I say, the survey we're doing now, if it'll work. If we're in the right place, it'll show a target zone and where it goes, which is very difficult when you're dealing with very small amounts of sulfide because there's no vector. So this is a relatively new development here for this type of exploration, and it worked extremely well at Lac des Îles. And Dave Peck thinks it'll work well here. So it gives us a way to, you know, target mineralization and then drill it efficiently. So that's kind of a new development for us.
Well, from the slides that you were showing earlier, I guess I'm trying to figure out, is it like you're going to try to drill across a long strike fault, like, for example, Great Bear has over kilometers, or are you shooting more like for something like a kimberlite pipe that's only a couple 100 meters across?
I would say it's more like a kimberlite pipe. We know the mineralization occurs along the contact of the margin of the intrusion and the country rocks on the south side for about 20 kilometers, but you don't get you know, you might get 10 to 15 meters of about a gram or sometimes less. So it's the events that will concentrate that mineralization, and around faults is what we think is you know, based on at Lac des Îles, what will do that. So yeah, it's kind of like looking for a kimberlite pipe. But what we do have is we've flown this property already with magnetics, and those type of big fault structures show up, and the property's also been geologically mapped. So we have a pretty good idea of where those fault structures are, and the two areas that we are starting off with geophysics have a tremendous amount of surface mineralization that, you know, from sampling. I think we've taken like 5,000 samples on this project over the years. Like a lot of that was done back in 2000, 2001 with Falcon. Falconbridge was our joint venture partner for a while. And so we did a huge amount of work on this project. So that's we have a really big database. So we're by no means starting from scratch here. And so we know where to go to do this geophysics to pick these target areas that can potentially show us, yeah, there's your, you know, call it a kimberlite-like target.
So how many holes and what's the depth of each hole are you going to then put on after you get your science done? And I think you said it was for $1 million. And
yeah.
Also, are you funded to do that, or are you going to have to raise again before you drill?
Yeah, no, we've got over $2 million, so we've targeted about $1 million for this program. And the first thing is the geophysical program will cost about $250,000 to $300,000, and then after that, we'll have in the range of 5,000 to 6,000 meters of drilling. In terms of how deep we'll drill, a lot of that depends on what the geophysics tells us. There are places where we have mineralization right on surface that we'll probably do some shallow holes again, but you know, the target might be 300 meters down, starting at 300 meters down. I don't know. But 5,000 to 6,000 meters gives us enough meters to, test several targets here, 2 or 3 targets that may arise. So we think that's a good first pass. We may need more, in which case we'll, have to go back to the well. But we're trying to find the right balance between issuing a lot of shares and
Sure.
during the shareholes. But yeah,
Sure.
we'll have a good first pass at it. Yeah.
But realistically, probably 10 holes versus 20 holes, that kind of thing.
I would say probably more towards 20, because some of the holes will be, I know we'll probably drill 4 or 5 holes that are, 100 meters, 150 meters type thing. Yeah.
Okay, fair enough.
Yeah.
Great. Thanks for answering the questions.
You bet.
Thank you so much, Steve. Peter was actually able to chat in his question, and he just wanted confirmation that palladium will be processed in Sudbury.
No, there's no, there's it's no guarantee where it'll be processed. So it could be, it can also go to a copper smelter. It could go offshore.
Okay.
Yeah.
And then I have 2 questions from social media to read to you. The first comes from Twitter, from Chris Berry, whose Twitter handle is @cberry1. Their question is, given that the value proposition here is one of multi-assets and multiple metals, can you rank the strategic focus on which assets get developed first and for which metals?
Well, if you're asking that question as of today, if I had, it's most likely the focus is and will be on palladium due to the price. Over time, as the EV trend continues and, nickel as a commodity increases, the focus could shift. But we know that's going to come, so we're trying to get both assets ready. As a junior, generally speaking, you only get value for one commodity, and right now the interest is in palladium. So that's where we're putting most of our resources, and but that's something that we monitor, all the time to see that, we don't want to spend money on an asset that the market does not have any interest. Clearly, the market has interest in palladium right now, and we've been knocked a bit sideways with the COVID-19 virus, and it's taken a bit of the shine off some of the more speculative junior mining plays like ours, but on a general range, it's an important commodity we're looking for. So that's where we're putting our resources right now.
Okay, thank you. And then our last question is from Facebook. It's actually for yourself and Mark. Mark, if you could unmute yourself. This question is, what can be done about the EV battery sourcing issues from both perspectives?
Is it so? I guess it's a question on Facebook. I mean, I think the to the point that, and Robin, feel free to jump
Sure.
in here. But I think one of the things that is worth mentioning is that nickel is really the key on the battery side for electric vehicles. The push to get cobalt out of the electrodes, so the move from 622 to 811 is that 8 is nickel, and so that's where the push on the nickel side to me seems like the ultimate hedge for in terms of this materials portfolio.
And my comment is if the adoption rates of EVs come anywhere near what the forecast is, the consensus forecast, it's going to be, they're going to need a lot more nickel, and it's going to be a real stretch to find the amount of nickel globally that will be required, and that will mean that the prices are going to be higher. So that's we want to position ourselves to to have a nickel project or two to develop, and but you know it'll need a big supply response.
Great, thank you both. We actually do have one final question that Scott had chatted into him. If you have time to answer one more.
Yeah, this is a question for you, Robin. Can you hear me?
Yeah.
Great. So, and you may have kind of answered this already, but it is, how has having Dave Peck on staff changed your plans going forward? Is it too early to tell? And if so, when might you expect his insight to shape plans?
Well, Dave's insight has already had a huge effect on our company. You know, I think he's the type of geoscientist that the investment industry will back him in his endeavors, and he will point us at projects that are, you know, have the potential to really be globally significant assets. And in terms of talking to the investment community, he's extremely knowledgeable and persuasive and credible. So, you know, then a lot of what we do is in the business is exploration, whether you're producing or just exploring, and that's what he's good at. And he understands nickel, copper, and palladium deposits, and you know those are the magmatic type of deposits, and that's a much smaller skill set and subset of people that have expertise in that. So he's gonna, you know, he likes our portfolio. He's worked on our portfolio before. He's going to be very, very instrumental. And you know, I can say in the last few months, we're meshing well. He really wants to make Grid Metals a real player in this space, and I think we're off to a good start. And you know, I tell you, he's very, very enthusiastic about East Bull Lake. He rates it as his #1 palladium target in North America, and he's very confident in the tools he's using. There's no guarantees in this business, but you know, we're going to be able to look, you know, however it turns out, look you know, the people who have participated and financed our company, and you know, whether win or lose, that you know, they got a real good shake on this one because we got the right guy, you know, planning and executing our program.
Fantastic. I think that's a great point to go ahead and move to some final closing remarks, Robin.
Well, I'd just like to say that, you know, first of all, thank you to Mark. I think that's, you know, we talk about the use of, you know, these metals and electrification in the world. And, you know, I'll be honest, I'd never heard of Mark's company, but, you know, highly entrepreneurial, what a great concept. And there you go. It's just another, you know, new company that you know, wants to participate in this market. And I thought that was a very interesting presentation. And I think that you know, there's so many of the major car companies that are getting into, you know, electrifying their fleets. We're past the tipping point, and you know, the commodity space is and finding these metals is gonna be a, you know, key aspect going forward. And you know, I think our company is very well positioned to explore the properties we have, and with Dave's guidance, look at some new opportunities as well. So you know, people who are listening, you know, keep us on your radar screen, and we look forward to some pretty exciting days ahead.
Great. Thank you so much, Robin. Thank you, everyone on the call, and have a great rest of your evening.
Bye for now.